Great. Thank you, Shay. So here to do a housing market update for you in terms of what's been happening in terms of resale and whatnot. No, it's been a pretty crazy time, and one of the most important decisions you'll ever make is purchasing a home. Probably one of the most stressful decisions. I know that personally, depending on location and the financing. But we have all the experts here to provide that advice for everyone tonight. In terms of today, just a quick overview of what's been happening into the market. So I'd like to look at just the resales and prices. And then because, being sponsored by the Homebuilders, I thought to talk about a little bit of new construction taking place. And then just move over to our forecast. So here we have sales, and these are annual sales dating back since 2005. And as you can see, in terms of what happened in 2015, it's been a very active market, seeing sales take place. In fact, sales were I believe in 2015, the highest recorded through the real estate board. Our calculations through the real estate board was roughly around 43,125, and I believe in 2005, which was the second highest level, around 42,000. As you can see at the title of this slide, those sales in 2015 actually surpassed 2014 levels by the end of October. So again, very active market. Safe to say, in terms of where the market conditions are, definitely in seller's conditions, which means you're seeing basically demand outstripping supply. One thing I didn't show, but when you look behind those numbers in terms of what we call the composition of sales, the majority of sales, or around 60% of sales, is actually in the multifamily home. So in the media where you hear a lot about single attached and what's been happening there, the majority of the sales are actually in townhouses and apartments. So which it kind of gives an indication of where, in terms of buyer demand. And a lot of that demand comes from, say, first-time buyers to people who are maybe retirees and looking to downsize and want something more smaller and easier to manage. Here we have a map of the sales that take place throughout what we call the Vancouver CMA. So it dabbles a little bit in Greater Vancouver and Fraser Valley. As you can see from what the chart says, or from the title says, sales have been pretty much equal in year-over-year comparison. So not like one area was more dominant than the other. We saw sales take place in all the different areas that make up Greater Vancouver. Here we have just the total sales taking place in a year-over-year comparison. And it's interesting to note, when you look at, say, Greater Vancouver, like I was mentioning, you see higher increases take place in the townhouses and apartment segments. But when you get over to the Fraser Valley, like say when you cross the Fraser River, you see higher increases in more what we call ground-oriented style homes. So your single attached and your townhouses. And so it's kind of maybe an impression or maybe an expectation among buyers that when you want to purchase a home and you go into the Fraser Valley like Surrey and Langley, you're looking more for a land component. And again, single attached townhomes. So as again, don't be remiss about, because it's the Greater Vancouver Homebuilders that are bringing this on, thought I'd show some information regarding new construction. CMHC tracks what we call our starts to completions survey as well as our market absorption survey. So basically the new homes from starts when they build the foundations to the end point where it's actually absorbed being sold, being lived in. And what the slide here is what we call newly completed and unabsorbed homes, or I like to call new homes that are available for immediate move-in. And what's been happening in the market, because the resale market has been so active, is that home buyers or buyers have been tapping into the new home market. In fact, to the point where we see in the chart here around the first quarter of 2014, levels are up around 4,000 units. Where we are at the end of December, those units are now less than half. So because we're seeing this demand take place in terms of the new home market, developers have kind of keyed in on that and have increased housing starts. Housing starts in 2015 reached 28,863. Our forecast for the next couple of years, a little bit more stabilization taking place in that, but still above, so we can say elevated levels. I believe the 10-year average is roughly around 17,825. So again, in terms of what's been happening, it's kind of a relay from what's taking place in the resale market, because we're seeing such activity take place, we're seeing that inventory go down, developers are bringing in more supply. Just moving over and talk about prices. CMHC, back in, November 2014, introduced what we call the Housing Market Assessment Framework. And it looks at 4 factors in terms of the housing market of some of the major centers across Canada. Those 4 factors are overheating, which looks mostly for sales to new listings ratios, price acceleration, which looks at price growth or price deceleration over a small time segment. You have overvaluation, which is looking at fundamental drivers, so like job increases, mortgage rates, and matches that up with what prices should be. And the last one is overbuilding, which is where we're creating too many new homes at a certain period of time. And then we do an overall evaluation. Excuse me. So as you can see here in terms of what's been happening in Vancouver, because the assessment framework is actually a historical piece of work, it kind of lags roughly around 4 months. So with the latest results in 2015 Q3, and we can see in Vancouver at the moment, even though we see overvaluation take place, overall we see weak evidence, what we call weak evidence of problematic conditions or imbalances taking place in the market. And if you can match that up, I put some other areas there, Toronto and Montreal. Just to touch upon on overvaluation, again, because it's a historical report, it looks at the latest numbers was on Q3. Those fundamental drivers are not supporting prices, and that's what it is saying. So we're seeing moderate evidence of what we call imbalances in the marketplace. And part of the reason why we're seeing that is actually due to here, in terms of what we like to call a segmented market. So in terms of a segmented market, this is the benchmark prices, and you can see the differences in terms of the benchmark price for single-attached homes, 1.225 million, versus, and say you look at the apartment at 436,000. So what we did is that we took all that data and we divided it into quintiles. So you have everything from your apartments to single-attached homes. We put it into quintiles. In the top quintile, the average price was 2.1 million. Versus in the average price for the rest of the properties in the lower quintiles was averages around 568,000. So you can see a wide spread taking place. And because of that spread, it's showing a little bit more in terms of sort of those fundamental drivers not meeting with the average price. Just to look at the benchmark price, just a quick background on the benchmark price. It was created to mimic consumer price index or inflation. So they took some commonalities of houses and matched it all together and was able to create a benchmark price. And it's a benchmark price that can be used to create an index. We find it very good in the sense that it can kind of give you a good movement on price trends. So as you can see in terms of looking for, say, since 2013, very little movement, in fact, some negative movement on the multifamily side in terms of prices. But then when you get mostly into 2014, we start to see that change take place and a little more positive gains in home prices. And it wasn't until then, in 2015, that we actually saw higher gains take place in the housing market, especially on the single-attached homes. Just to talk about foreign buyers, I think everyone's been hearing a lot about that in the media. CMHC stance at the moment is that there's really no hard facts in terms or hard data regarding foreign buyers. We see a lot of anecdotal information and pieces that come out, so there is sort of some leading in that foreign buyers may have an influence in the market. What we like to call, because there's no hard data, we always refer to as buyers of high net worth or repeat buyers. So, but here's of what we've collected over the last few years in terms of foreign buyer activity. So BCRA came out with a report, I believe, from data collected by the Real Estate Board of Vancouver, 5% roughly foreign investors in the market. And then I guess you can read the rest down. One of the things that CMHC does do is that we can do a condo vacancy survey every year. And in the last 2 years, we introduced a new question asking property managers how many owners in their condo building are actually foreign buyers. So it's a very low percentage. I believe in 2015, we had around 3.5% Vancouver condos are owned by non-residents. So that would include foreign buyers as well as sort of the people who are like snowbirds, so people who bought the condo but have actually spent most of their time away outside of Canada. So it's a very low percentage at the moment, but it does increase the closer you get to the downtown core. So I believe it gets up to 5, maybe 10, 15% when you get to the downtown core, then it spreads to a much lower percentage as you move away. So here's a forecast and what's sort of the factors that we look at in terms of the housing market. Mortgage rates. The main message about mortgage rates, we do expect mortgage rates to move up. Just even though we're seeing low bond yields, the cost by the financial institutions to raise money has actually increased, and we expect those to have an effect on mortgage rates. But the main message on mortgage rates is that they're still very favorable for buyers. In fact, if you looked at the 50-year history of mortgage rates, we're actually in its lowest time. In terms of employment, we've seen a lot of employment gains. Our estimates roughly around 3.1 or 2% over the next couple of years. One of the things that has actually helped the economy here has actually been the devaluing of the Canadian dollar against the US dollar. Some of the things that we're seeing is increase in certain industry sectors such as manufacturing, transportation, warehousing, and tourism. And that's actually has brought in a lot of dollars into the local economy, as well as because of the lower dollar, we're also seeing higher retail spending, which has a large impact on gross domestic product, or GDP. And then we have net migration, steady increases on net migration. And that actually has an impact not only on home ownership, but also on the rental market as well. And here we have our forecast. We expect MLS sales to actually stabilize over the next couple of years. It's been pretty crazy in 2015, and I know in the first couple of months they've actually taken off. But I think with higher increases in the mortgage rates, as well as the changes in some of the mortgage rules, and especially on the insurance side, we expect some stabilization to take place. But when you look at the 10-year average, which is roughly around 34,000, still sales are at elevated levels. And because of the way the market is, we're seeing still solid demand for single-detached homes and townhouses. And that product type should have more of an influence in terms of prices. So our home prices we expect to be on the increase. So one of the questions that Bob asked me, I remember we did this last year, was what are the hot markets in Greater Vancouver? And figuring that from I can't really, being from the federal government, tell you where to buy, but I thought I'd just say, well, maybe I can do a ranking of some of the top markets. So here's a breakdown of single detached sales that we're seeing in Greater Vancouver. And it's kind of interesting when you look at sales for single detached homes. As mentioned, the demand for single detached homes much greater in areas in the Fraser Valley, so Surrey, Langley, and even parts of White Rock. We're seeing actually higher sale volumes in terms of single detached homes in the Fraser Valley, and less so when you get closer to the Vancouver core. But when you look at in terms of apartments and apartment condominiums, it's actually a different story, because in terms of, I guess, maybe affordability and price comparisons, we're actually seeing a lot more sales take place on the apartment side, closer to the downtown core. In fact, there's like 5 of the top sales centers are roughly around the False Creek, Kitsilano, and West End area. So in summary, just looking at underlying fundamentals will still support housing demand. We expect sales to stabilize, but remain elevated in Greater Vancouver, as I mentioned, even though sales will stabilize, still above the 10-year average. And we expect buyer demand to keep prices up through the forecast period. So just one more thing, a lot of the information that we actually have it on our website, cmhc.ca, for the information portal. So if you're looking at new housing as well as rental, please check our website. It's actually a very well source of information. Thank you.